The inflation report this morning came in hot, hot, hot. We are getting into all of that today, its impact on the markets, and what we think is going to happen moving forward on today's episode of Money Never Sleeps. Welcome back, everybody. Before we get going, do us a favor, hit that like button. If you haven't yet, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, we talked yesterday about inflation and the possibility of a hot reading and how the market would respond. Well, we got that hot reading this morning, and the market has responded in kind, having a little bit of a sell-off. At this moment in time, we got the Dow down almost 700 points. NASDAQ down 332, about 1.86%. S&P down about 86. We got the dollar up to almost 105. VIX is right up there, close to 16. So it has been a brutal day. Brutal day. Leroy Jenks, thank you very much. Appreciate that. Kevin worked hard on that intro. But it's been a rough day for TradFi. Crypto is holding up better than expected. I know you're going to get into why that is happening here in a little bit. But how are you feeling about the current state of the markets? We'll get into the inflation reading and what all that means.
Yeah, this is probably the worst possible thing that could have happened for markets, right? And I know that there's a lot of banks out there right now, and we'll pull up an article in a little bit, that have to be biting down on their left fist and punching the ceiling with their right, because this hurts everyone and just complicates things. And it almost seems like it's orchestrated to the point where everything is set to fail, because this is an unsustainable path with these rates being so high. This inflation data just shows that inflation's being stickier than it needs to be. The Fed is still can't cut as early as March as I think a lot of people were hoping. I think a lot of people are still hoping that. But I think we're definitely going to be seeing a later date unless something does break. But the thing is, now we have a lot of these liquidity facilities that are drying up come next quarter, next month. March 11th, the Bank Term Funding Program ends. We're going to also see the reverse repo dry out pretty soon. Once that happens, you have very few modes of finding any type of liquidity for these banks. So if anything like New York Community Bank happens during that time, it's going to be, contagion city for what we're seeing. So this really complicates a lot of the landscape, and that's where we're seeing, I think, a lot of the volatility come in on the markets today. TradFi more so, and again, TradFi is extremely frothy. And the crypto front, a lot of people are saying that a lot of money's coming in from institutions. We'll show you why that's probably not 100% true. But yeah, this is a warranted day. Bad data should get bad results in the market. The question is, is this just the beginning, right? I think that the markets are going to soon start to price in, once some of these things start to hit the fan, that maybe we should have been pricing it in this entire time. So I feel okay with today. I think it makes sense why we're down in the markets. Let's put it that way.
I mean, if the last, year plus is any indication, the markets are going to shrug this off and buy it back tomorrow. We'll see if that's the case. Let's get into the numbers a little bit. We saw CPI increase 0.3% compared to 0.2 expected. Core 0.4% versus 0.3 expected. Year over year, the headline number is 3.1%, and the core is still at 3.9. That's actually up from over the expectation of 3.7 and flat month over month, which is not what the Fed is looking for. If we kind of break it down into categories, the biggest part of it for the core was services and shelter. Transportation services were up really big. Like car insurance is up like 1.4%. Like what the fuck are we doing here? A lot of this seems like it's just, I don't know, correct me if I'm wrong, but just greed and wanting to price gouge people as much as humanly possible while they still can. So, I mean, the shelter one going up is big. That's up 6% year over year. Like, it's expensive to own a home and to get a mortgage. It's expensive to rent right now. We've already seen people's credit card balances are going up. Yes, wages are increasing, but if these parts of their spending are increasing more than wages, that continues to be a problem. Nothing about this seems good. I'm looking at the CME futures for the Fed funds rate. For the March meeting, we now have it at about a 92% chance that we're not going to see any sort of movement on rates, but they're still pricing in a decent possibility of a cut in May, which I think is ass backwards. June,
Yeah.
the expectation is still that we're going to, it's only about 29% chance that we see rates stay at this. They have it cut in, they have it going down at least 1 or 2 times by then. I think that's incorrect. It wouldn't shock me if we didn't get a cut until July or September. And as we've discussed in the past, if it's a cut earlier than that, it's probably due to something breaking.
Yeah, 100%. I think that's completely accurate. And I think this is also part of the Fed's thing where it makes, and again, a lot of people, I think the current administration would like to see a rate cut closer towards the election just because it seems like everything's going in the right direction. However, this data point, if we look at this in the grand scheme of things, just complicates everything. And you said if we do get a rate cut before then, that those meetings, there's a good chance that it's going to be because something's broke. And now, we're not pricing in as many rate cuts. There's a good chance that if we are doing this to fix something that's broke, we're going to be going back to zero. And that's not the bullish. We're going back to zero. We're going to print a ton of money. We're going back to zero, and there's probably going to be a lot of layoffs because that is being called, and we're going to start to see some of that bleed through a lot of the system. We have tons of news on this already. I mean, I'll pull up an article in a little bit, but we got news out of Germany that there is a huge crisis, very similar to ours, regarding the regional banks and commercial real estate. Let me just pull it up right now because this is really interesting. I sent you guys in the chat earlier.
It's not looking particularly good for the Germans at the moment.
German bank braces for wave of bad loans and great real estate crisis since the financial crisis. And now, yes, we understand that there's big issues in Germany. I think if people didn't know this, WeWork actually had a lot of offices in Germany and a lot of other parts of Europe. And that absolutely showed you how bad the commercial real estate market is. Yeah, I mean, the entire company went bankrupt. Now we're seeing that, smaller companies and, a lot of these banks that have these loans are in a lot of trouble. And don't forget, there's also exposure, derivatives. There's a lot of things that can definitely go wrong. But I believe where was it? I think I saw it somewhere around here. It was talking about what these banks are doing right now. And they're pretty much setting aside cash just to prevent any bad loans. And the bad thing about that is I just lost it where I was. But pretty much these banks... here it is, right here. It's right at the top. The German lender focused on real estate has set aside more money for bad debts as it braces for what it says is the worst decline in commercial property values in 15 years. Now, the bad thing is that's the same exact plan that Janet Yellen has told the banks in the United States and Jerome Powell have told the banks in the United States regarding liquidity after the Bank Term Funding Program closes. So they pretty much said, yeah, just make sure you have some cash on the sides in case anything goes wrong. Well, if the FDIC is also getting involved in saying that they need to, probably something we should definitely be concerned about. And we also know that Germany and by itself has had 7 months of just, contraction in their economy. It's just not growing. It's slowing down significantly. We know that their manufacturing sector is in a depression right now. It's going to bleed into their services sector. Same thing with the United States. Our manufacturing is not in a great place, and soon it's going to bleed into the services sector. I think those are the next ones to go, especially if a lot of these equity prices start to tumble, right? I think that's a reasonable statement to make. But we're getting closer and closer to all this liquidity being absent, and we're seeing all these banks having issues with these loans, and they're going to have to put up cash and collateral. What if there's not enough collateral? I know that the Treasury, the Treasuries have been absolutely getting killed recently. I think a lot of people are still bearish on Treasuries, but it doesn't seem like this is a good place for, anyone who has some of these equities or debts, because people are going to definitely look for cash collateral to put up in order to save some face and protect themselves. I think me and Chris were talking about this. It's like cutting off an arm just to save other limbs. That's pretty much what we're seeing right here in the German banking sector and also the U.S. banking sector. Same strategies, different problems. However, it's all interconnected. And we're probably going to start seeing it sooner than later, all this kind of boil to the surface.
All I know is if your strategy is aligned with Janet Yellen's, you may want to reevaluate that shit. Okay.
I mean,
outside of inflation, we touched on that a little bit. We see the VIX going up. We see the dollar going up. We see gold going down. We see crypto responding resiliently. Let's go to crypto now, because you had your thoughts on why it's holding up as well as it is. We did see Bitcoin get over 50K yesterday, which was pretty awesome. But It's pulling back now, understandably. Not as bad as you would think, though, compared to risk assets in the TradFi market. So what, in your opinion, is leading to this, this stable price currently in Bitcoin as well as ETH?
Yeah, absolutely. And I look at Bitcoin's chart. Obviously, it's been 7 or 8 days of just straight green, right? That's very fishy to me. Again, I understand it's a bounce from this low down here. It rallied up higher, and we talked about that, the Wyckoff distribution model yesterday. Seems like this is definitely the extended wave we were expecting. We're finding a little bit of rejection here. It almost was bearish engulfing, as it sold off earlier today. Got close to, what was the low of today? 48,300. So 48,300. But the reason I'm very skeptical on Bitcoin here is because of what the current trading pairs are and what the price is based off of these trading pairs. So we can also see this market maker pattern here. We're seeing these prices move up significantly, rapidly, really fast, and not necessarily finding any type of support or consolidation other than in these subwaves within it, which is very reminiscent of what we saw back in October and what we saw back in July when the price shoots up straight and then we consolidate sideways and pushes up again. These are market maker patterns. We've talked about this in the past, but I'm going to pull up a site that I don't like at all because it's owned by my mortal enemy, CZ. But I think he's kind of he's hiding nothing. He's exposed himself. He's naked, and so is the Binance/Tether organization, because we're seeing Bitcoin markets.
CZ Crypto Edition.
Naked and afraid. Guess what? He's going to be in trial next week. Don't think that the price right now doesn't correlate to what he's probably going to be saying, right? He's going to be singing like a bird. So I think that's another thing people are probably, and again, people, I mean, one whale is probably doing to make the markets, profitable for them, right? Bitcoin hasn't been at 50,000 in such a period of time, December 2021. But if we look at this here, top trading pair across all markets, Binance, Bitcoin against FDUSD. If we remember FDUSD was a stable coin that Binance had used after BUSD got banned from minting anymore. Paxos got banned from minting anymore BUSD. And so they went to TUSD and FDUSD to kind of compensate for that loss of that stable coin exposure. Now, with FDUSD, this market cap used to be less than 500 million. And 90% of that market cap was owned by Binance. Here today, we're looking at this right now. You can see that the market cap, well, you can't see right here, but the market cap is considerably higher now. It's 2.7 billion. I can pull up the other chart, but I don't really want to go to it right now. But we can see this is
you can't see that right now. It's a little too small.
Is it? Yeah.
No, you're good. I'm just fucking with you, Kevin.
Fuck. I can't see you, so that's why I'm like, I'm just hoping that this is big enough on the screen. But yeah, this is the top traded pair. Second traded pair, also Binance, Bitcoin against USDT. Now, the Binance, I understand, it's still a big exchange, but these two pairs make me question everything, right? FDUSD shouldn't be the number one traded pair on Binance for Bitcoin if we're looking at Bitcoin's price moving and we're expecting that whales and we're talking about institutional whales in the United States are moving the price up. Doesn't make a lot of sense that they're using FDUSD. It seems more of like an inside operation from one of these exchanges that have adopted it. We see that Bitcoin USD is the third exchange, top traded pair. And the rest of them, I mean, you don't have another USD pair until cracking down here. But if we look at the percentage depth of how much it takes to move the market here, you can see that right now for Binance FDUSD, it only takes about $4.9 million, 4.9 in both directions. You go to USDT, it takes about 11.3 million, and if you go to Coinbase, 15.405 million. So it makes a lot more sense. The top traded pair that doesn't need necessarily a ton of money to move the market, and the price of that asset and those pairs is the one that's probably moving this market entirely. I think that's pretty likely, right? So that's why I'm kind of cautious when I see FDUSD here and I see USDT as the top two traded pairs. Binance is still number one across the board. I would expect Coinbase to have been a lot higher, but clearly it's not. And that tells me that the exchange itself isn't necessarily the one that's driving a lot of the inflows. I think if anything, if we do start to see a bit of a sell-off, we'll probably see more of the outflows come and those numbers and the depth change for Coinbase. But right now we're not seeing it because the price is still staying relatively high. And again, I mentioned CZ is the reason why I don't think that Bitcoin is dropping just yet. I think they're trying to distribute this properly. And that's why the Wyckoff model that we showed yesterday of them trying to distribute it around the 50,000 to 51,500, maybe even a little bit higher. They could really rally this up here. I'm very cautious with FDUSD and USDT being the top two traded pairs. That's something you have to be cautious with because we definitely saw what happened in October. We saw what happened in July. These things pump extremely fast, and then guess what? You're stuck here just absolutely getting liquidated. So I think it's a very dangerous place to be trading this market. I think it's good to understand where the money is coming from, but I don't necessarily think that there is a play for me personally where I could say, you know what, I'm going to short this, even though I think that it's going to go down significantly here. I still think that there's a lot of liquidations that are meant to be had before, maybe there's some more scrutiny that comes down on some of these exchanges. Again, there's no difference between Binance, Kraken, and some of these other ones that have, definitely helped facilitate some of that USDT transfers back from October. I'd definitely be cautious with Bitcoin's price right now. And again, Bitcoin and ETH, I think, are relatively staying strong here because there's no reason necessarily to sell it. I think there's also news around the ETH ETF that people are probably buying into a little bit. Not sold on that being the number one case, but Bitcoin dominance is still 53.75. It's actually gone down from last night. So for alts not to bleed out here too much, kind of makes sense. I also think that just shows you that there is probably distribution that needs to be had a little bit higher, and they're hoping that they can get there before anything bad happens. So I'd be watching the alt to be watching Bitcoin in case there is any type of quick spikes to the upside. But once you get to those levels up there, good chance that they won't be able to sustain that probably for the coming next weeks and months. Everything's extremely overbought. Even if the weekly is oversold, it could go back to being oversold.
Okay. So we got that part of it. What else in Trat? So let's go back to TradFi. Yeah. That's where we're seeing a lot of the carnage today with some of these big movers down. Coinbase about 4%. PayPal's getting hit hard. Microsoft, Tesla's having a rough day. So
should we go somewhere bullish?
It's a pretty tech-heavy sell-off at the moment. Why don't you take us where you want to go in TradFi? Lead us on a journey.
We'll go through the indexes just to be safe. But there's one index that we need to keep an eye on. And I've mentioned this several times before, and especially with inflation running hot, according to the data that came out today. This is a country that actually needs to raise rates, and they know that because here we are on the Nikkei last night, over 1,000 points. 1,000 points on the freaking Nikkei. Look at that. I mean, it's beautiful. Yeah, I'm not bullish on China, on Asia, Japan at one bit, but 1,000 points. I mean, round of applause for that. I think that's pretty amazing. From this red line up here is the all-time high. We haven't seen that since 1989. So we're under 3% away. We're 2.65% away from getting to the all-time high. See the daily stochastic RSI down there is getting close to overbought. You look at the volumes. We don't got the volumes for that, but we're pretty much getting to a point where we're getting near the all-time highs again. And inflation is becoming a problem. But the only thing, like I've said before, if they don't raise rates, then if they raise rates, then this is the same exact setup and scenario that we saw in 1989. The only difference is that the entire world economy is probably going to go into a bit of a recession. And I say a bit because I'm being a little bit conservative there, but pretty good recession considering all the troubles that we're seeing between collateral and dollar assets and the shortages that we are seeing, right? The other thing is I'll talk about when we get into some of the other indexes that there's a lot of issues that we have to worry about as prices grow too fast, too great too fast. But this is the Nikkei. Let me try and get this on the weekly so you can see the double top. Let's do the monthly. Yep. So this is the Nikkei on the monthly, and you see how it just rallied. It took roughly 18 years almost to get to that point, the bottom, 2008, and then it rallied up here for 15 years. I mean, it's probably going to play the same way out. I don't think it's going to go straight down, but I do think that there is a good move to the downside when they do decide to raise rates. Probably when the rest of the world is cutting rates, and it's going to be an inverse effect. It's not a great place for Japan, but I just want to bring this up because we are very close to that double top. This would be historic. If we put in a new high, then we can obviously bring the C wave up. It's not going to go as low over historical time. But for right now, for the time being, I think this is a flat correction, and we'll just keep monitoring that. But that's not necessarily a great thing. This is not a good sign of strength. Too fast, too quick. It's dangerous. Let's take a look at some of the boys in the big tech. See that Apple right now is down about $2.90. Nothing too crazy there. Tesla down again. I got the monthly up here. It just looks like crazy when you're looking at that. Tesla's down. Nvidia is one that's really interesting because Nvidia was down a lot earlier, and then it kind of bounced back, right? And the reason it bounced back is, I think no surprise to anyone, but earnings are next week. So I think it makes sense that you're probably going to see the pump into earnings despite whatever the rest of the market does. I think most of the driving force of why the market's pulling back here is because tech pulled back a little bit today, but the majority of where the move actually was robbed from is definitely in the smaller caps, right? We saw the Dow and the Russell take, serious dumps. I mean, look at that for the Dow. That's, oh my gosh, it's so fucking beautiful. I'm sorry, guys. It's an amazing candle. I haven't seen a candle like that in a long time. It's just like, I don't know.
Do you need a
It's like,
minute? Like,
it's like past
do you need a
gas.
minute for yourself here? Like, should I step away while you admire that candle?
Yeah, I mean, this is just beautiful. I mean, there's
We'll be
nothing else
done
I can
soon
say.
enough. You and that candle can do whatever you need. Okay.
It's so big and red. No, I'm just kidding. This is I had to, sorry, Jweb. But yeah, this is a big fucking
What few viewers we had have all left.
like a droopy red. I appreciate that Chris is in on the joke too. All right. This is obviously the Dow's down 732 points right now. It's probably going to try and find some support on the red 50 EMA, but this rejection here is just massive because the thing is we did not find any support build up here for a long period of time. It was just up only, up only, up only. We got to backtest support, and because we haven't backtested support, red candle straight down, right? S&P gap down. Look at that big gap down. It's actually wild. We've created a huge gap here. Now the question is, are we going to fill that gap before we fill the rest of these gaps? Are we going to go back up and then come back down? I don't know. We're going to have to watch how that plays out. But the S&P, the 7 stocks didn't save it today. It's close to getting to 100 points down on the day. Still relatively high, right? And we're still at 492 or 49.29 in terms of the price. The Nasdaq's having a good day down, 350. Yeah, I mean, these are just gapping down, but the Russell is the one that's really interesting. It's down 83. Everyone was saying that small caps are going to rally here. They had a good rally for a few days, but once again, I don't know how many times we have to go over this. Up here, rejected, up here, rejected, 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 rejected. It's been rejected 1, 2, 3, 4, 5 times now. At some point, resistance has to be resistance. It can't go up, and it can't. I mean, it can trade sideways, sure, but the structures point that it's going to come down. I'm not necessarily sold on the fact that this is going to go up higher. I think we're seeing that the small caps are actually small caps and not doing well for a reason. And it really is the tech stocks that are holding up most of this market. So when you see the Russell here and it's just kind of sideways consolidating, it's nowhere near the all-time highs like some of these tech stocks are. Kind of gives you the idea that maybe this isn't a good place right now in the market. And, the dangerous thing is wages are going up, right? Prices are still going up, but we're also starting to see layoffs. Is that stagflation? Does that help any of these smaller businesses? Not one fucking bit. So this is going to be really interesting to see what happens with the Russell. This one's probably going to bleed. And a lot of people were saying Russell 3000, Tom Leah Fundstrat was saying that. I don't buy that one freaking bit. And I'm sorry if I'm being abrasive here, but I just have to be because this makes no sense to me. There's a lot of levels of support down here. I think the next key level that we're probably gonna have to test if we want to see it go down further than 1630 is 1630, right? It's found support once, twice, 3 times. We hit this 5 times, and we've only tested this 3 times.
Saying that if we want to see 1630, it has to go under 1630 first. Has to go to 1630. That was some
exactly
real John Madden shit right there.
I don't even know what you said because you zoomed out, but I know I said something stupid, but I just rolled with it because guess what?
That's whichever team scores more points is probably going to win the game. That was a very comparable Kevin.
The bold strategy, Cotton. Yeah, I mean, let's put it this way. If we want to see 1456, we're probably going to have to break 1630. I think that's the same exact thing I just said.
No shit.
I just did it on purpose. I'm being an asshole today. Sorry.
I know you've been up all night. I know you're up all night watching the market, so I'll let you go there.
I feel like I've huffed helium all night just watching this. I got like an hour of sleep. But yeah, this is projection. I think this is rejection territory, right? I think it was one last good run up before you get some obviously we get some pain in the market. It's correction territory. I thought that maybe we would have been able to put in an all-time high, but a yearly high, or like at least over the past 12 months right here. And that would have finished this five-way structure off. However, if we just look at this on the macro, rejection, 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 every time it seems like it's going to be that way. So I wouldn't get too concerned with that. Let's take a look at volatility and we can wrap it up off of that, because this is the other one that's really interesting. We know that OpEx is coming soon. I said that if we get the VIX above 18, it's a very dangerous place, because then a lot of people are going to have to start covering. And by them covering, that means that we're going to see the price of the VIX probably go up, because people are going to have to close their short positions, and it's going to add to the price of the volatility index. And we can see here that this is a really dangerous thing that's happening. They're crushing the VIX as much as they can. However, each time they crush it, putting in a lower high, lower high, lower high. And this doesn't necessarily work the same way as other indexes do or other stocks. Lower highs, repeatedly, eventually it's going to come down. However, with the VIX, it kind of tells us something that they can't contain what's coming. Right now the VIX on the daily is above the 200 EMA. That's a freaking great move considering that today we opened up at 1398 or something like that. We've rallied all the way up to about 1603. That's a great move on the VIX. I'm very interested to see what comes in March, as we know some of the banks are going to be in a lot of trouble. I mean, if we want to take a look at the banks real quick, across the board, everything is, big banks are doing pretty bad today, down 3.41%. Smaller banks are doing bad, down 5.13%. I mean, Bank of America down 3.45, Citigroup's down 305, Schwab is down almost 4%, PNC is almost down 3.79%. The reason we are seeing this is because of what happened today with the interest rates being so high for a period of time, to continue to being high. There's no bank term funding program after the 11th. What's the difference then where we were last year as opposed to this year? Now we just know that a lot of these banks have really bad debt. They're trying to get off hand. Jerome Powell, Janet Yellen told them, hey, just have cash on hand, save up just in case anything bad happens. FDIC said the same exact thing. Now, if one of them goes bad, like New York Community Bank, what happens then? Well, I got my own problems. I don't want to be dealing with their problems. I can't afford to, add to that. And that kind of also adds to the issue if the banks go bust. And I'm going to go back to the TradFi right here because this is kind of a high concept thing that a lot of people don't necessarily understand, but it's very simple once you put it in terms. Clearinghouses and market makers don't have to keep 100% capital requirements funds for what the market cap is for some of these assets. We talked about this a few weeks back. So NVIDIA, they don't have to keep the entire market cap of NVIDIA on hand. They don't have to keep the entire market cap of Apple on hand. But that causes a problem when you start to see volatility increase. You see some problems in the banking sector. There is a sell-off because they have to get rid of some of these assets in order to make sure that they stay solvent. What happens to some of these big tech stocks is not the small ones, it's the big ones. Well, they start to bleed out faster because they're trying to make a market. They're trying to find a buyer for each seller. And the issue is that causes the price to tumble faster than people expect. So it's very dangerous once these big stocks, these indexes, like not the indexes, but when we look at the NVIDIAs, the Apples, the Microsofts, the Metas, all these that have had extremely good pushes to the upside, it's dangerous when you get this big. And it's the same thing that happened with New York Community Bank. They got too big and now they can't have the capital requirements on hand. So guess what? They are more likely to go insolvent. It's a very dangerous game when you get too much money, you grow too fast, too big. That's why I mentioned it earlier. But volatility is pointing to the fact that we are going to see some negative price action probably in the months to come. And I say months because anything can happen, right? We could get another month of it just being sound as could be. But I'd be very concerned seeing how this plays out in the next few months if we know that rates are going to stay probably elevated for a period of time. Some of these stocks are just getting so extremely frothy to the point that, if we get, a bad day like we got today for a week or so, what happens then? We're probably going to see those prices being chased to the downside by sellers trying to find buyers. I think we're in a pretty good place for a bit of a, not a crash. I think a crash is coming eventually, but definitely a good place for a good correction. And, we didn't test any support on the way up. We never back tested it. Probably going to test the next level of support. And we might be going through making red candles like we are on the Dow, but not convinced, man. I think that this is a pretty bad setup. I think that we got confirmation of that today. It doesn't always seem like it. You're watching, the charts going up, going up, going up. How could it ever be a bear market? Eventually, fraud. What was the quote from The Big Short? You can't get away with fraud or something like that. It's never worked in the history of forever. Something like that.
I don't remember.
You guys seen the movie, but
I've seen it too many times. I don't remember that quote.
But that's what
I know what you're talking about.
Yeah, it's problematic and no one wants to acknowledge it, but we've done a pretty good job, I think, on the show of pointing out things that could happen. Just be patient and watch it, how it happens. Obviously I think that there is a good chance that we could be seeing some of what we said come to fruition if things play out this way, which today was a pretty good sign that we could be seeing some bad months ahead.
Yeah, we've gone up a lot and there is a lot of room to the downside, and the market, I still think, isn't adequately pricing in that potential. So we will get more data moving forward. We got plenty of time for that. These things don't happen overnight.
Sorry, guys. Sorry.
It was not with Kevin and his big red candle. All right, that's going to wrap it up for today's show. Appreciate you all joining us. If you have not yet, hit that like button, subscribe to the channel. You know the drill. We'll be back tomorrow to take on the latest of the markets, what we're seeing out there, any moves that we may be making. Appreciate you all very much. Have a great day. Stay safe, and we'll see you next time.
Take care, everyone.